Well, one of the first things that I do every morning when I come into work is to see what the New Zealand dollar's done against the US dollar. And over the past couple of months, this has been a pretty good indication of what global equity markets and commodity markets have done overnight. And this was definitely the case over the past 24 hours, with the New Zealand dollar lifting quite strongly against the US and is now trading just shy of 80 cents against the US dollar. And the key reason for this is that we've seen equity markets, particularly out of the US, lift quite strongly overnight, and also seen some pretty good demand for commodity products. Of interest to farmers may be the news that Glencore, which is one of the world's largest commodity traders, is looking to do an initial public offering of their shares to the open market. The company will be valued at around $60 billion US, and so far all indications are that demand for these shares has been very, very strong. This does indicate to me that investors have a real thirst and a real demand to get exposure to commodities at the moment. Well, over the past 24 hours, we have seen some price lifts for some commodities around the world, but there's also been some mixed responses. And we have also seen the Food and Agriculture Organization of the United Nations give a good indication that they are expecting to see increases in food prices in some parts of the world. In my eyes, I do think this is good news for agriculture here in New Zealand. However, we have also seen some mixed news. As we know, we have seen the world becoming to rely quite heavily on the fact that Chinese demand is really spurring along a recovery at the moment. However, overnight, the Chinese central bank has lifted bank requirements and reserve requirements in order to make sure that they are controlling inflation. The key risk in my eyes for this year is the fact that we could see some of the central agencies choke off demand in China, and this could have a big effect on commodity products. The key demand factors out of China will have a big impact on dairy commodity prices over the next year or two. My core view is that we will see demand outstrip supply, in particular for dairy, and this will be a key underpinning factor for prices over the next year or two. However, the factor that we could see the New Zealand dollar stay around 80 cents or even move higher to around 85 cents will be a negative factor for payout. If this does happen, I wouldn't be surprised to see US dollar denominated dairy prices lift in response to this, as we're still going to see some pretty good demand out of China. So what does this mean for payout for next year? I would think that we would need to see dairy commodity prices lift quite strongly in order to achieve a payout that is similar to the current 2011 levels. However, I'm still thinking that we will see a good payout for next year, probably around $7 or just higher, which in context would still be a fantastic result.